Welcome back. President Trump's budget in focus. OMB Director Mick Mulvaney defending the plan on Capitol Hill yesterday. Watch.
We are slashing in this budget, you are slashing Medicaid by $610 billion. Combined with the health care cut, that's almost $1.5 trillion of cuts to a program that currently serves 74 million Americans.
To most people, plain language, slashing Medicaid would mean we spend less next year than we did this year. That's what a slash means, right? That's what you hear in the No, it's not true. Generally speaking, across the budget, all we do is slow the rate of growth.
Joining us right now, the Wall Street Journal's global economics editor, John Hilsenrath, to weigh in. John, good to see you. Thanks for joining us.
Good morning, Maria.
Your take on the budget, John?
Well, you know, the Republicans have not embraced it, basically. It's an opening shot. You know, I think it sets the tone for cuts in discretionary spending, cuts in the growth rate of discretionary spending. But, you know, our reporters on Capitol Hill talked to a lot of Republicans who, on individual programs from Meals on Wheels to Medicaid, are saying we can't do all of this. So it's an opening shot, but they've got a long way to go before they pass anything.
John, this is Lindsay Bell here. I have a question on the 3% growth rate, economic growth rate that the budget projects. That's much higher than what the Fed has. That's higher than the CBO. How do you expect that to be implemented over time? I mean, we've been at 1.5% to 2% growth for the last 5 or 6 years.
Well, you know, one of the inconsistencies, frankly, in the budget is that it projects a 3% growth rate based on new administration policies like tax cuts and regulatory reform, but it doesn't lay out the tax cuts that are going to get you that 3% growth rate. So, you know, I think that's another very big question mark in the budget. I should say you had a shot up there of Mick Mulvaney. The other important news that came out yesterday on Capitol Hill from Mulvaney and Mnuchin was the Treasury is getting a little bit worried about its revenue flow right now. The government has already hit its debt ceiling. It could run out of room to finance its operations by August or September. Mnuchin and Mulvaney were both pushing Republicans yesterday to raise that debt ceiling before they go on recess for the summer. So that's another cog in this whole system that they've got to work through. Republican Party has a lot of work cut out for itself in the next few months. That's the bottom line.
Right. John, it's Dagan. Mnuchin was saying that he wants a clean debt ceiling increase, but the Freedom Caucus has already started pushing back against that. And, and it raises the issue of what trouble does that just alone create for the markets during the summer?
Well, it could be a problem for the markets. You know, so when you say a clean debt ceiling increase, what the Trump administration wants and what the Obama administration always asked for was just raise the debt ceiling. Don't attach any conditions to it. Well, Republicans, and particularly the Freedom Caucus, always wanted to attach conditions to raising the debt ceiling. It's not a free pass. You can't just run through the stop sign. And the question is whether they stick to this now that they've got a Republican president to deal with. There's a lot of internal tension in the party that they have to sort through, and not a lot of time to work it out.
You know, John, Steve Cortez here. You know, this would be my question, I guess. I'm not surprised that a lot of establishment people, and almost everyone on the Hill I would characterize as establishment, don't like this budget. Grover Norquist said it's the most conservative budget that's been proposed since Ronald Reagan.
He said that yesterday.
You know, real discretionary spending cuts, something we just haven't even fathomed under the Bush administration, certainly not under the Obama administration. But I think that Trump was elected for exactly this. So I'm not surprised, I guess, that the establishment is pushing back hard. But isn't this the message of 2016, is that the American people want real change in Washington, D.C., not tinkering around the edges, but wholesale, real change of the administrative state?
That's certainly the case, and we're going to have to see if the Republican Party can deliver it. You know, what Trump promised to the American people, it's kind of a hard deal to deliver on, because he said no changes to Social Security and Medicare. Well, those are the biggest drivers of deficits in the long run. If you want real change on the debt and the deficit in the long run, you need to attack that. And, you know, Trump was sticking to his promise. You know, when he sat down with Mick Mulvaney, he said, we're not touching Social Security and Medicare. What we see then is you got to hit a lot of other parts of the budget. And, well, establishment Republicans, like you say, and even some of the Freedom Caucus guys are saying, you know, We had a Republican from North Carolina saying, listen, I deliver Meals on Wheels myself in my own district. How do we just how do we cut back on that so much?
Yeah, no, you make a great point. But, you know, isn't any president's budget always an opening shot? I mean,
Absolutely.
you know, you said a moment ago it's an opening shot. Yeah, it's going to get marked up, but that's always the case, right? No surprise there.
Absolutely. It's, you know, this is why I keep turning back to, you know, Paul Ryan and Mitch McConnell. They now have to take this and turn it into a piece of legislation that they can deliver to the president. And exactly. they have to turn it into a tax policy. That's the most important part of this. If he wants 3% growth, they have to deliver a tax policy that the president can sign off on, and that's all part of the work here.
We had Kevin Brady on yesterday, chairman of House Ways and Means, and he basically said we're laser focused, we're doing this, we're going to get this done. And by the way, we are going to speak with Mick Mulvaney later on in the show. But John, let me switch gears, ask you about the Fed, because we had the Fed minutes out yesterday suggesting that the central bank is ready to raise rates soon. We had a voting member right here in the studio yesterday. There was the president of the Philadelphia Federal Reserve, Patrick Harker, told me that next month's meeting is definitely on the table. Listen to what he said. I want to get your reaction, John.
So I've asked for, and my forecast is 3 rate hikes this year. We have 1 under our belt. I think 2 more are appropriate. I've not factored in any fiscal changes to that forecast. So I think we measure those out over the course of the remainder of the year.
Yeah. And that's without any fiscal policy that he's put in his model, John.
Yeah. So the market rallied on this news that the Fed was going to raise interest rates. I think that's kind of interesting. You know, the market, I think, is taking some reassurance that the Fed is confident enough about the outlook that they think they can be tightening policy on the monetary front. And if we do get a stimulative fiscal policy, Harker talked about fiscal policy, they might want to be even more aggressive. You know, so they're talking, I think they're going to do a June rate increase unless we get a horrible unemployment report in a couple weeks. They're going to do that. They're also talking about starting to wind down this $4.5 trillion balance sheet that they've got. They put out new information on that yesterday. It looks like they start that process this year, too.
Yeah, Patrick Harker talked about that as well.
We have a pretty active Fed, and the market is okay with it.
Yep, we'll be watching that. John, great to see you. Thanks so much.
Sure.
John Hilsenrath, Wall Street Journal.